Today, we will talk about the Dow 30. The Dow 30 is a widely watched stock market index comprised of 30 large U.S. publicly traded companies. Also known as the Dow or the Dow Jones Industrial Average, it tracks the combined share price performance of what its committee considers to be the most important names on the New York Stock Exchange and NASDAQ, excluding transportation and utility companies. That makes it, in many people's eyes, a barometer of the U.S. stock market and economy. Most people in the world have heard of the Dow. They talk about it on television and in newspapers all the time, normally when discussing the performance of the stock market and the companies that drive the U.S. economy. It is its reputation as a proxy for the economy that has made the Dow 30 so famous. The goal of the index is to provide an indicator of the general health of the U.S. economy as well as the way in which the economy is growing or contracting. The companies in the Dow supply many jobs, make up a large portion of retirement funds, and, in many cases, are reliant on the population's spending habits. In other words, when they do well, it generally means the economy is in good shape. And when they collectively start to stutter, it often suggests that bad times could be forthcoming. As with other indexes, the Dow 30 isn't just used for analysis purposes. It's also possible to invest in it via exchange-traded funds, such as the SPDR Dow Jones Industrial Average ETF. This ETF is popular because it gives investors the chance to buy stakes in 30 of America's largest, most significant publicly owned companies all in one holding at a much cheaper cost than if they were to buy all 30 stocks individually. Generally speaking, the companies that appear in this index are blue-chip stocks with big customer bases, steady revenues and profits, and excess cash. That makes them highly sought after. The Dow 30 was created by journalist Charles Dow and his business partner Edward Jones in 1896. It was launched as a spin-off of the Dow Jones Transportation Average and is the second oldest stock market index in the U.S. The Dow 30 was developed as a simple means of tracking U.S. stock market performance in an age when information flow was often limited. The idea was to let ordinary investors know which direction the market was heading. Originally, the index consisted of 12 companies considered important to America's economy. The Dow eventually expanded to 20 stocks in 1916 and then 30 stocks in 1928. The Dow 30 is commonly referred to as the Dow Jones Industrial Average, which is a bit of a misleading name. In its early years, the index was made up of many of the heavy industry stocks that helped to build America. And that name has stuck, even though the U.S. economy and the index's constituents have since changed significantly. There are no detailed guidelines on why a company is included in the Dow Jones. A committee, which includes employees from S&P Dow Jones Indices and the Wall Street Journal, decides which companies make the cut. The only criteria is that those included must have an excellent reputation, demonstrate sustained growth and be of interest to a large number of investors. Here are 7 key takeaways. 1. The Dow 30 is a widely watched stock market index comprising of 30 large U.S. publicly traded companies. 2. It is also called the Dow or the Dow Jones Industrial Average. 3. Constituents are chosen by a committee and the index is price-weighted. 4. The value of the Dow 30 is computed by adding up all the stock prices of its 30 components and dividing the sum by the Dow divisor. 5. The Dow 30 is considered one of the best barometers of the U.S. stock market and economy. 6. Individuals can invest in the Dow through the SPDR Dow Jones Industrial Average ETF. 7. Critics of the Dow believe it poorly represents the U.S. market as it only contains 30 large-cap companies and is not weighted by market cap. Hope this would help. Thanks for watching.